Welcome back to another video. In this video, we are going to cover trends. So in this lesson, I'm going to break down what are trends, the types of trends, trend lines, how do trends help us, and the three trend market. So in this full video, I'm going to break down everything you need to know and understand about trends to understand and know about market direction. So let's jump right into it. What is a trend? So a trend is the general direction in which something, basically a stock, is moving towards. So once again, a trend is something, basically a stock, where or what direction it's moving towards. So a trend showcases us the direction of a stock. Now there's three types of trends. First, uptrend. So a stock is either going on an uptrend, stock is either in a sideways trend, or a stock is either in a downtrend. So once again, there's three types of trends. There's an uptrend, a sideways trend, or a downtrend. A stock is always in one of these trends. It's always going in one of these directions. Understanding the direction of a stock is very, very important for us. So let's go and break down the first trend, which is an uptrend. So what is an uptrend? Uptrend is when the price of a stock is moving upward or getting higher. So as you guys can see right here, you can see stock is going on a healthy uptrend. It's going on a clear-cut healthy uptrend. This is a healthy uptrend, right? An uptrend is characterized by the chart's peaks and reaching new highs as the direction progresses, and an uptrend showcases higher highs and higher lows. For example, stock goes up, takes a break. That's a healthy uptrend. That is a healthy trend overall. Stock goes up, takes a break. Stock goes up, takes a break. Stock goes up, takes a break. And you can see every high, every peak is getting higher and higher. Every low is getting higher and higher. This is considered as a healthy uptrend, a solid healthy uptrend. Once again, you can see stock keeps going higher and higher and higher and higher. This is good. There is a difference of seeing a stock making an uptrend or going in a direction like this opposed to seeing a stock just randomly jump up in one day. If a stock randomly jumps up in one day, that's not a healthy uptrend. This is a healthy uptrend. Why? Once again, because the stock moves in a certain direction, pulls back, takes a break, makes a move up, takes a break, makes a move up, takes a break. This is a healthy uptrend. Besides an uptrend, the next thing we have is a sideways trend. If you look here, this is a sideways trend. There's no direction. This is when the price of a stock is moving sideways. There's no real direction in a sideways trend and could also be known as a consolidation or a break phase. Basically, the stock takes a break. You'll see how this connects. But once again, you can see stock is in a sideways trend. Now, when a stock is in a sideways trend, there's usually no direction. It's just trading sideways. It's sometimes very, very choppy. Some people like trading sideways trends, buy here, sell there, or short here and cover here, right? That's up to you. That depends on how you're trading. But if something is very, very choppy, you as a trader need to be able to analyze and understand that this is not a trade that I'm going to take. And finally, we have something called a downtrend. Downtrend is when the price of a stock is moving downward or getting lower. A downtrend is characterized by the chart reaching new lows as the direction progresses. Lower highs and lower lows. For example, stock makes a move down, takes a break, makes a move down, takes a break, makes a move down, takes a break. That is a healthy downtrend, right? It's a very healthy downtrend. You can see the highs, you can see every high keeps getting lower, keeps getting lower. Every low also keeps getting lower. This is a healthy downtrend. Now, if it just kept going down, that's not a healthy downtrend. We want to see these consolidation periods. We want to see these breaks. We want to see the stock take a break. This is healthy. Think about it. Think about you as a runner. Imagine you run 20 miles. If you run 20 miles, you eventually need to take a break. If you take a break, you can then maybe run another 20 miles, right? Now, if you run 20 miles and you keep going and you don't take a break, what's going to happen eventually? Eventually, you're going to fall or you're going to reverse, right? Same thing with the stock going on an uptrend. Stock is going on an uptrend, and let's say you're running 20 miles, you go 40 miles, 50 miles, and you don't take a break, you're going to fall very hard, right? So a stock needs to have these breaks, pretty healthy. These are extremely, extremely healthy. That's what we want to see. This is a healthy downtrend. Now, if you look right here, you can see a stock. We're on stock Apple 1 year, 1 day chart. You can see stock Apple is in a sideways trend. After the sideways trend, when the critical level breaks, what happens? Stock now goes on a downtrend. Now, even if you look at the downtrend, you can see break, break, break. You can see multiple breaks, healthy downtrend. Makes a move down, takes a break. 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 Move down, takes a break. And then you can see sideways trend, downtrend, and then you can see right here the downtrend comes to an end, right? It starts going down, starts trading sideways, right? And you can see when the sideways trend breaks, stock is now reversing to an uptrend. So understanding market direction, understanding the direction of a stock is extremely, extremely important. You can see downtrend, sideways trend, and now it starts reversing to an uptrend. Here's another example. You can see sideways trend, no real direction, sideways trend. We're on stock OSTK daily chart. Each candle here represents 1 day. You can see slowly, slowly, slowly consolidates and bleeds out, goes in a downtrend. You can see what happens. Healthy downtrend right there. It's not making aggressive moves, but you can see pretty healthy downtrend. Stock starts moving in a downtrend. Right here, you can see sideways trend, right? And then finally, you can see a reversal of an uptrend. Right? Even when you look at this uptrend, you can see a few things. Sideways trend, no activity, no volume, pretty flat. Volume jumps up, showcasing a strong uptrend. What happens right here? Stock consolidates, takes a break, right? You can see strong uptrend. Stock goes from about $8, $9 all the way to $17, makes a move up, consolidates, and then continues to make another move up. Obviously, things started shifting here because the company had earnings, and that kind of shifted the whole direction and the trend of the stock, but you guys understand the point. Downtrend, initiated as a sideways trend, right? Started as a sideways trend, then went to a downtrend, consolidated as a sideways trend, reversed, and you can see volume is kicking in as well. Now, a few things I want you to understand, right, about trends. Stock is, yes, on a sideways trend here. And I want you to stay with me on this because it's very important. Now, if you're trading a stock on a daily time frame and a stock is trading sideways, right, and then starts going in a downward trend, you have to understand, if a stock was once at $22, $23 and it goes all the way down to $8, for this stock to go back up, or for it to form an uptrend, it's not randomly just gonna one day start going up. The stock needs some catalyst here. It needs some news. It needs something that flows into the stock, some news that flows into the stock and makes the stock go higher. Be it the company announces earnings, be it the company gets a new CEO, be it the company announces a new partnership, whatever the case is. And you can see downtrend, sideways trend, volume kicks in. Right? That volume is showcasing interest. Now, the volume didn't just randomly pop up, right? The volume came in because there was news for stock OSTK. There was a lot of news surrounding it. There was a lot of good catalyst, a lot of good sentiment. That's why this started going up. And that's why when you look at price action is confirming that the news was good. Price action is confirming that people are more and more interested. And price action is confirming all of those things. But we have to and we need catalyst first, which goes on to the next slide. What sustains or reverses a trend? Number one, we need volume. So if let's say a trend is going in an uptrend, we need volume to support it. If a stock is going on a downtrend, we need volume to support that trend too. Market direction. Market direction is extremely important. What is happening with the overall market? Is the overall market selling off? Is there good news? Is there bad news? Company sentiment. What is happening with the company? What is their sentiment? Is it bullish? Is it bearish? Are there upgrades? Are there downgrades? What is happening here with the company sentiment? We then have economic events. For example, let's say stock Apple is going on an uptrend, but then the trade deal, the tariffs kick in, and the tariffs are, let's say, 50%, right? Which obviously is going to affect Apple stock. Do you think this uptrend will sustain? Absolutely not. If Apple is on an uptrend and some negative economic event comes out that affects Apple as a company, Apple stock will most likely reverse. And then finally, any news related to the company, right? Any catalyst, basically any catalyst is needed for a stock to reverse its trend, right? Or for a stock to continue the trend. So keep that in mind, especially when you're trading a larger time frame, and you'll understand what I mean by that as we progress. If you're trading a larger time frame and a trend has been going on for months, you need news, you need some catalyst to sustain that trend. So that's very, very important. Next, we have trend lines. What are trend lines? So trend lines highlight a trend and connect swing lows and swing highs. So just like we have support and resistance, right, when a stock is trading sideways, we also have support and resistance when a stock is trending. When a stock is trending, you can have these levels of support. You can have these levels of support, which are extremely, extremely helpful. So let me show you an example. So if you guys look right here, you'll see the stock is on a nice uptrend. Obviously not making higher highs, but you can see stock starts going up. Every time it hits this level, every time it hits this trend line, the trend line which we established ourselves, just like we established our critical levels, right? You can see what happens. You can see what happens. You can see what happens. And you can see what's here. What is right here? Right here now, not only do we have a trend line, we have both our support level, which was once resistance. You guys see resistance point. That resistance point is now our support level, support, and we have our trend line. So there is a possibility that this may possibly go up. But now I want you to understand something, right? Let's take a step back, and right now we're putting some pieces together, right? And like I said, as we progress, you'll start getting a better idea of everything else. But as of right now, when we look at this trade, we see that the stock is trending up, right? We see that there's a critical support level. We see that the stock is going right into that support level. Now, a lot of people would look at this and say, okay, it's time for me to buy, right? And I understand why. I understand why you're thinking it's time for you to buy, because you have a trend line, you have a support level, which is making a super strong demand level. Now, like I said before, just because we have a support point, just because we have a trend line point, does not mean you buy into it. You need the stock to showcase demand. You need the stock to bounce off that level. So an average trader would take the trade here. Now, a smart trader, which is what I want you guys to be, is you guys are required to wait. Wait for a confirmation. Wait to see buying pressure. This chart right here is an intraday chart, right? So each one of these candles represent about 5 minutes, right? Now, obviously, since we're on a 5-minute chart, things can switch very quickly, right? This could happen on intraday. This could switch. It can go down. It can continue the trend. We don't know. Our job as traders is to see two things. Number one, is there volume kicking in? Is there a strong green candle? Does buying pressure kick in? That's A. If buying pressure kicks in here, there's a strong green candle, volume increases, strong play. If that's not the first trade, the second trade could be right above that. If the stock breaks that point and makes a new high, that's a second trade where we can maybe add to our position. And once we go over scaling in and scaling out, you'll see what I mean by that. But I'm just trying to put some pieces together for now so people understand and start getting the concept much better. Or the third thing that can happen is this could sell off. Now, if it sells off, what do we want to see? High volume. We as traders don't care what this does. We just want to be on the right side of it when it kind of happens. So right now, there's zero confirmation. We wait for the play to take place. So now, if you look at the next move, look what happens. Look right here. The average trader is taking on the buying trade here. We are waiting for a confirmation because there's zero confirmation here. We're not saying, oh, it has hit the trend line multiple times. It's going to bounce. It's going to bounce. No. What if it doesn't bounce? We don't know. It didn't give us any confirmation. And then we look at what happened. You can see strong sell-off. High volume, increased volume showcases a strong sell-off. Look at that candle. Strong red candle. Strong sell-off. The average trader got stuck holding the stock. Even if you had a stop loss, okay, fine, you lost a little bit, not a lot, but that was a dumb trade. The smart trader saw this, and they're like, okay, time for me to get in, and they capitalize on the play by being patient and understanding that you need a confirmation. And look at this confirmation, beautiful confirmation. From everything we have learned so far, this is a perfect confirmation. Strong red candle, high volume, strong sell-off, perfect confirmation to short. And you can see continuation move. It's probably going to take a break, maybe keep going down over and over again. And now this is where we can maybe look at our next support levels and wait for that level to break and apply more concepts, which we'll go over, so we get a better idea of everything. Now, how do trends help us? Trends help us identify the direction a stock is headed towards, which makes it easier for us to make a high probability trade, or makes it easier for us to make high probability trades. Right now, if a stock is trending up, it's easier for us to be on the buying side. Can we be on the shorting side? Yes, we can, but it's easier for us to know that this is trending up. It's easier for us to know that this is trending down, and it's easier for us to know that there is no trend and it's sideways, because we can then trade in that direction and make our lives easier. For example, knowing the direction is very important. Right now, if you look at the stock, what do you think a lot of average traders are doing? And once again, we're not trying to be average traders. We're trying to be great, phenomenal traders. So we need to understand everything on a deeper level. So when we look at this trade, this is where people are buying, thinking it's now in an uptrend. So people see this and they're like, oh, it's on an uptrend. Yes, I agree to a small extent that this is a small, minor uptrend, and you'll see what I mean by that when we get to it. But the overall direction of this stock is still a downtrend. This is still a downtrend. Now, most people that are buying around here are assuming that, okay, this is going to keep going up. Smart money is either buying this, taking a quick trade, and they're out, or they're waiting for this downtrend to continue. For example, look, this is where people or average traders are buying. Smart money is shorting this play because it continues the downtrend. It continues the direction this stock is in. You have to understand, when a stock is going in a direction, it's never going to just straight go in that direction. It's going to go down, maybe retrace, have a pullback, go down, retrace, have a pullback, go down, retrace, have a pullback. That is normal. That's what we want to see. We do not want to get caught up into a play thinking that, oh, I see green, it's going to go up. No, we need to understand more and more about the overall direction and trade alongside with that. Now, if you see right here, same stock, this is where people are buying. They get caught up into the trade, continues the downtrend, and you can see what happens right here, right? Downtrend, and then downtrend finally switches direction. Here, until this point, we are in a sideways trend, right? But you can see it breaks the trend line, and it also breaks our critical level, which gives us a stronger confirmation, right? And you can see, breaks out, retest, boom. That's showcasing us that the downtrend has now finished. It is ended, right? That could be a buying opportunity, right? So understanding the overall direction is very, very important. Now, trend time frames. Trends can be found on any time frame, but remember, the larger the time frame, the longer the trend will be, right? For example, if you have a trend on a daily chart, this is a daily chart. This is a daily chart, meaning each candle represents a day, and you have an uptrend for 1 year. This uptrend can last much longer than seeing it on, let's say, a 1-minute chart. If you see an uptrend on a 1-minute chart, right, it doesn't mean it's going to go on to the next day or next week. This might last for 15 minutes, it may last for 20 minutes, it may last for 5 minutes, we don't know, but we have to understand that this is on a smaller time frame. So yes, you can find trends on a smaller time frame or a larger time frame, but understand on a larger time frame, the trend will be longer. Now that goes to our next point. We have something called a 3-trend market, where we have 3 types of trends. We have a primary trend, a secondary trend, and we have a minor trend. Right? What this means is we can have an overall uptrend, and in that overall uptrend, we can have different type of trends. We can have a secondary sideways trend and a minor downtrend, or we can have a secondary uptrend and a minor uptrend or a minor downtrend or a sideways trend, where all of these could be different. For example, right here, what do we have? We have a primary downtrend. You can see overall this is going in a downtrend. We have a secondary uptrend here. We have a secondary uptrend here, right? We have a secondary uptrend here. We have a secondary downtrend here, right? So we have secondary smaller time period trends. And then we have a minor trend here, right? We have minor trends here, right? So understanding that is very important, where you can have a primary downtrend and you can trade secondary trends or minor trends. But now keep in mind, when you're trading minor trends, and I'm going to break this down more in the upcoming lessons when we start putting things together. Right now, I just want you to understand and have an idea. But when you're trading secondary or minor trends, make sure you go on intraday charts, 15-minute, 5-minute, 30-minute, 1 hour intraday chart, so you get more action. Why? Because think about it. This is a daily chart. We have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 days, right? We have 10 candles right here. Now imagine you go to a let's say 30-minute chart. Think about all of the candles you're going to have here, which are going to show you a stronger and better and easier play, because it is a smaller trend, because this is a smaller trend. So when you trade smaller trends, make sure you go to intraday charts, right? And once again, you can see overall long-term downtrend, primary downtrend. We have a secondary uptrend, minor uptrend, secondary downtrend, secondary downtrend. You know what I mean? You can trade multiple trends within the overall direction, but do not buy this and think it's gonna like go to the moon. Like, that's not how you're gonna go about it. So understanding this is very important. Let's just recap everything. Knowing trends, understanding the trend, and knowing the direction, very, very important in trading. You need to know what direction the stock is going in, either an uptrend, either a downward trend, either a sideways trend. When you're using trend lines, make sure when you apply them, they are applied alongside with a support or resistance level. They make trend lines a lot stronger. Once again, trends are extremely, extremely important. And moving forward, we're going to start putting more and more pieces together.